Audit planning and fieldwork.
Audit procedure is a method and techniques used by an auditor to gather and evaluate evidence. There are 8 methods that was used to obtain evidence, which is inspection of records or documents, inspection of tangible asset, observation, inquiries, confirmation, recalculation, reperformance, and analytical procedures. Method number 1. Inspection of records or documents. This is involve careful examination of records, document, and physical resources. Methods number 2. Inspection of tangible asset. Examination of assets such as cash, real estate, account receivable, and etc. It is to provide reliable audit evidence. It is not necessarily about rights and obligations of entities. Methods number 3. Observation. It is to see the performance of some activities. Methods number 4. Inquiry. Setting question and ask directly to the client or third parties with knowledge about particular matter. It can be obtained in writing or orally. Method number 5. Confirmation. Obtaining feedback from third parties. There are 2 types of audit confirmation, which is positive request and negative request. Positive request is the confirmation party need to communicate with the auditor regardless that they agree that the information is correct. Meanwhile, negative request is the confirmation party need to communicate with the auditor only if the information supplied is incorrect. Method number 6. Recalculation. It is to check the accuracy of items in various documents. Method number 7. Reperformance. Evidence that gathered the technique performed by the auditor during audit planning stage. Lastly, analytical procedures. It is originally developed and used for financial analysis purposes, but auditor use it as an audit tool which consists with cost-benefit or risk analysis approach in auditing. Test of control is to provide evidence about the effectiveness of the design and operation of internal control policies and procedures. Substantive procedures. It is to provide direct evidence as to the fairness of management financial statement assertions. This includes analytical procedures, test of detailed transaction, and test of detail of balance. Analytical procedures is originally developed and used for financial analysis purposes, but auditor use it as an audit tool which consists of cost-benefit or risk analysis approach in auditing. The objective of analytical procedures is the process where it helps an auditor to understand the client's business, identify areas of potential risk, and require further audit investigation. It also can be classified as evaluative procedures and predictive procedures. Test of detailed transaction. It is to test for an error or fraud in individual transactions. Test of detail of balance. The focus on the items that are contained in the financial statement account balance and disclosure. Audit evidence is made up of underlying accounting data and corroborating information. Sufficient and appropriate audit evidence. Audit engagement requires the auditor to form a judgment whether the evidence is sufficient or appropriate. Sufficient is the quantity evidence obtained. Meanwhile, appropriate is the quality, which is reliability and relevance information. There are 9 persuasiveness of audit evidence, which is relevance of evidence, reliability of evidence, independence of provider, effectiveness of internal control, auditor's direct knowledge, qualification of provider, degree of objectivity, timeliness, and sufficiency. There are 7 types of audit evidence, which is 1. Physical examination, 2. Observation, 3. Documentation, 4. Confirmation, 5. Inquiries of client, 6. Analytical procedures, and 7. Reperformance. Physical examination. It is inspection or count by auditor of tangible asset. Observation. The auditor witnesses the physical activities of the client. It also focuses in client business. Documentation. There are 2 types of documentation, which is internal and external. Document vouching is working backward from the statement items through underlying accounting data to source documents. Meanwhile, document tracing is to examine the source documents and assertions whether the amount that have been correctly recorded. Confirmation. Receipt of a written or orally response from the independent third parties. Inquiries of client. It is to obtain information from the client in response to the question. Analytical procedures. It usually fluctuation occurs when significant differences are not expected but do exist. Lastly, reperformance. Rechecking the sample of the computation and transfer of information. See whether the information was consistently in the right accounting record.
Thank you for your attention.